Companies with a net worth of 500 crore rupees or more will have to prepare IFRS converged accounts as the new Indian accounting standards and IndAS kick in this year. However, as industry prepares for this transition, Malvika Jain finds out that a few important issues involving M&As as well as NBFCs still need clarity. Here's that report.
It has been just about 3 months since the new accounting standards IndAS came into effect. As listed companies begin to adopt the new standards, experts say that some key issues still need to be clarified by the government.
A bunch of things with the roadmap itself that need to kind of get addressed. One is the roadmap today does not apply to NBFCs and insurance companies and banks, but there are some large corporates who as subsidiaries have NBFCs. Now the key question is, how do those NBFCs actually kind of transition into this IndAS framework? So companies are faced with the issues around dealing with issues such as mergers that are currently in progress. The question is, will the accounting prescribed in the court order kind of prevail, or will the new accounting requirements prevail again? I think the MCA has to come out with some guidance.
According to a study conducted by KPMG India, boards and senior management of 94% of listed companies surveyed are aware of the implications of transition to IndAS. However, many of these companies are behind the curve in terms of carrying out impact assessment and training their employees for the transition. The move to the new accounting standards, however, doesn't worry the Institute of Chartered Accountants of India, as ICAI feels there are enough skilled professionals available to smoothen the transition.
Given the kind of preparation which we have carried out in the institute over the last few years, I believe there are sufficient number of people who are available across the length and breadth of the country, and it is a matter of time. Once the large listed companies start implementing these standards, there will be the published financial statements available, which can be followed by the other companies in the second phase.
Phase 2 of the transition to IndAS will take place a year later, that is in April 2017. That's when companies with a net worth between 250 crore rupees to 500 crore rupees will have to switch to the new accounting standards. For now, the firms who have to lead this transition are hoping for clarity on when banking, insurance and non-banking finance companies will have to switch to the new Indian accounting standards. In New Delhi, Malvika Jain.
Clarification being demanded by the industry. Let's step into a short break. On the other side, Samsung